Simone, you. All right. Hello and welcome to the GRadulting Workshop Series. My name is Debbie McCutsky, and I am the coordinator of services and programs for graduate student legal aid. I use she, her pronouns. On behalf of the Grad Legal Aid team, I am happy to see everyone joining us on Zoom and those who are watching this on YouTube. Today's workshop is, how do I pay off my student loan debt? Ouch. Hopefully we're going to make that a little easier for you today. Before we get started, I want you to know that Grad Legal Aid is here to help you. We offer several services, and if you paid your graduate student fee or your undergrad student fee, then you paid for those services already. And so what do? Well, we have an attorney on staff, and the attorneys help students with legal issues like tenant-landlord problems, traffic citations, reviewing contracts, really a very broad range of issues. We have an immigration attorney who helps our students, our international students. We have advocates on staff. One of them is here with us today, Simone, and the advocates help students who get charged by the Office of Student Conduct with a violation of the Code of Conduct or the Code of Academic Integrity. We believe that no one should really go through that process alone, and we want people to make informed decisions. So I am a notary. I can help you with that. And there is more information about who we are and what we do and scheduling appointments on our website. So take a look at that, gradlegalaid.umd.edu. So, okay, just a little bit of housekeeping. Near the end of the workshop, we will post a survey. We want to know how we did with the workshop, so please reply to that. We will email links to the survey, to the recording, and the slides after the workshop today. We will also post that on our website. And of course, if you're joining us live, we welcome your questions and your comments, so you can post those in the chat for everyone to see. All right, let's move on to the workshop. I am so pleased to introduce a speaker who has been with us for, I think, 5 or 6 years now. Let's start with Professor Sam Handwerker. Hi, Sam.
Hello.
Thanks for being with us today.
A pleasure, as always.
Sam is a CPA, and he's a full-time lecturer at the Smith School of Business, and he is the esteemed advisor for TurpTax. And what is TurpTax? Well, it is a group of student volunteers from the Smith School who help prepare income tax returns for their fellow students and for the staff and even folks from the surrounding community. So Sam and his
For
team,
free.
oh yeah, exactly. We love free.
Yeah.
So it is an amazing and wonderful service that really helps out hundreds and hundreds of people every year. So, and Sam has a sidekick with him today. His name is Danny Villamayor, and Danny is a junior and an entrepreneur here at the Smith School of Business. He's also the president of Terrafin, and he and Sam will tell us more about that. So I'm just going to turn things over to you two now.
Okay. All right. Danny, you're up to bat. And please introduce Terrafin as well. And
all right,
go for it.
Good evening. My name is Danny Villamayor. As Miss Debbie has already told you, I am a junior at the University of Maryland at the business school and an entrepreneur. Terrafin is a financial literacy program that is partnered with the IRS, and we are looking to put the tools of financial literacy in every student's hands here at UMD. Right now, we're going to move on to seeing what grades everybody's coming from in the audience. We're going to send out a poll. a pulse to see if, if we have sophomores, juniors, or freshmen here. So far, one response. Okay, all right,
Oh, okay, great. That's the audience we would hope for. Very
exactly.
good. Yeah, great. Okay, excellent. Thank you for your answers, and there's your results there. And we're good to go. Okay, Danny, now you know who we're talking to.
All right,
Okay.
great. I'm gonna move on to the presentation then. All right, can everybody see?
Yeah, it looks
Looks
good.
All right, great. Welcome to How Do I Manage Student Loan Debt? We'll be giving information and advice moving forward. So these are the topics that are going to be covered. There's the information on the overview of student loans. We'll be covering some terminology, the types of student loans, or the types of loans, and Biden's federal student loan forgiveness program. And we'll also be giving advice moving forward, including finding the cost of your loan, budgeting, and savings. So let's move on with the terminology. So we have fixed and variable interest rates. Fixed interest rates stay stable during the life of the loan, and variable interest rates change throughout the life of the loan. Time value of money. A dollar is worth more today than it is a year from now. Compounding interest. Interest that is incurred on top of interest that has already been incurred. A grace period is a period in which a borrower doesn't have to pay any money to the issuer towards the loan and doesn't incur any penalties for doing so. And future value. The future value is the value of an asset based on an assumed rate of growth over a period of time. So let's go over the types of loans. There are two types of loans. There are private loans with a plethora of options, all of them with a mix of variable and fixed rates, or just a piece of both. Loans can be taken out to, oh, sorry about that. Loans can be taken out to cover the full amount of the tuition, and the standard practice for most private loans is to include deferment and a grace period of around 6 months after graduation. So you won't be paying interest during that period until after 6 months of school. So
Then is the interest paused during that period, or the interest is accruing?
we're gonna have to, so for private loans that depends, but most of the time it's going to be accruing during your time in school, but student loans are different. So these are
Right.
the federal student loans given by the government. So we have direct subsidized loans whose interest rates are covered by the government until 6 months after you finish school. And these are not credit-based, so your credit history will have no effect on this, on
Right. And
taking
during
out the
that,
loan.
and subsidized loans means that while you've borrowed money, there's no interest accruing on it until the payments start, till you're required to start making payments.
Exactly, yes. The direct unsubsidized loans are normal loans, but they have a lower loan fee, which is an amount that you have to pay when the money is dispersed to your account. But for all purposes, it is a normal loan. The interest does accrue and you do have to make normal payments. It is not credit-based, and there is a 20,500 limit per year. The direct plus loans are loans taken out by grads or parents. Again, they're a normal loan. You have to pay and interest starts accruing as soon as you take them out. But they are only available after exhausting every other option, such as scholarships and the direct subsidized loans. You cannot have an adverse credit history when taking out these loans, but other than that, they won't look too closely at your credit score. All right, let's move on to Biden's federal student loan relief. So yes, the federal student loan forgiveness. In 2022, student loans amounting to $10,000 or less will be forgiven with an additional $10,000 if you qualified for the federal Pell Grant. So there's a few more qualifications that you can take note of. Obviously, you have to have a current outstanding debt on federal loans. Federal loans and Parent Plus loans obtained before June 30th, 2022 are eligible. So if you obtained your loans after that date, you can't appeal for that. And if you earn less than $125,000 a year individually or $250,000 a year for married couples. But for the most case, most people will qualify for that.
Yeah, let's go back to that slide one more time, just to clarify a couple of things.
Yeah, sure.
Good work so far. We're really good stuff. On the income qualification, if it's a Parent Plus loan, that's going to be looking at the parent's income, not the student or graduating student income. So I just wanted to point that out. And of course, interesting to note that June 30th date, real important the way Danny put that up there. It means don't start borrowing more for the fall semester, spring semester here, 2022, 2023, on the theory that those are going to have some forgiveness to them. That's not a sure thing because the cutoff was loans before June 30th. Okay.
All right. A little more additional information. Federal loans taken out for undergrad, graduates, and/or professional degrees do qualify, and refunds on payments can be made during the payment pause, which started March 2020. So if you made any payments to your loans during the payment pause, you could get a refund for that. Do you want to talk about what happened, or should we save that for later?
Well, we can mention it now and we can get in more details later, but as of the moment here on November 15th, 2022, the Biden forgiveness is in a pause mode while the courts and perhaps even the Supreme Court will work this out. There's been numerous challenges of constitutionality because as many things in the world, some people are given a nice break by the concept, by the plan, and some people are not given a nice great break by the plan. For example, people who are companies that are funding the subsidized program, they investors and the unsubsidized program as well. These vendors, these investors were expecting a certain rate of return, and they feel like this is jeopardizing their funds or jeopardizing their interest return. And there's a bunch of other challenges. So people who didn't have Pell Grants, they feel like this is an arbitrary line in the sand. All of these challenges, from what I've read from lawyers who are deep into these constitutionality issues, seem to indicate that there's not a whole lot to be expected that the challenges will prevail. They are weak at best, but judges and courts will make decisions that sometimes aren't the right decisions based on the academics, and we need to wait. So currently the program is on pause in the sense that they're not taking any more applications for forgiveness. If you haven't already done that, you are unable to make the application at this time until the courts systems work this out. And I think we'll talk more about that later. So let's move on. That's good.
All right.
We will talk more about it later.
I would like to note that if actually they'll probably figure out a new deadline by the time they resume the federal loan program. All right, so the cost. We're gonna teach you how to find the total cost of your loans. So first you need to figure out how much you have to pay before you make any decisions. You know, you can't plan to pay for a cost if you don't know how much you need to pay in the first place. So we're gonna go through an example. We're gonna find the cost of this subject called Adam's loan. which he took out his freshman years of college using the future value formula. Now, the future value formula, we're trying to find the future value of an asset based on an amount of years and the interest rate in the period. So this is a formula. We're going to take the present value and multiply it by 1 plus the interest rate to the power of n, or the amount of periods that we're going to go through. So for example, Adam took out $10,000 in private loans throughout his time at school. Adam wants to pay off the loans within 5 years of graduation. That's just Adam's goal. Since there's a 6-month grace period, he only has to pay for 4 years and 6 months, or 4.5 years. So therefore, we calculate the future value formula by placing $10,000 as the present value and multiplying it by the parentheses 1 plus 0.05. We're assuming a 5% fixed interest rate to the power of 4.5, which is the period that that interest is going to incur. So doing all that calculation, it rounds out about $12,455. I would like to note that most interest rates are expressed annually, but they're usually compounded daily. The percentage is just spread out through every day. So as you can see, Adam had to pay a total of $2,445 for the cost of borrowing the loans on top of the full amount of the loan he had to repay, which was $10,000 over the course of 5 years. This is just Adam's goal for when he wanted to pay off his loans, but what if he wanted to pay them off later or even sooner? Well, we can simply make the calculations for all of these years. So there you have it. Those are the calculations for each year if Adam waits after graduation, and how much he would have to pay if he waited and didn't really touch it. But there's good news. Student loans are actually calculated with simple interest, not compounding interest. That means that you only pay interest on the loan's principal, or the amount that you borrowed, which means Adam's cost of borrowing is actually $2,250 because he's paying 5% on a $10,000 loan, which amounts to around $500, and that's just going to add up each year. So if he didn't pay it off year 1, he incurs 500, year 2, 1,000, and so on. So he would pay off 500 in interest each year until he pays it off, or pays off portions of the principal itself. It is important to have a goal in mind for when you want to repay your loans, but it is also important for having a plan in place for paying them. And we're going to discuss that in the next slide. Budgeting. We're going to teach you why budgeting is important and how to create a budget. So, budgeting. You have to be responsible with your money so that you can pay off your loans by your set date. But how are you supposed to know? How are you supposed to be responsible without really knowing where your money's going, or being able to see like how much income and expenses you have throughout your months on a month-by-month basis? By budgeting. Budgeting allows you to visually see where your money is going and allows you to plan for your needs as well as your wants. To build a simple budget, simply place your income at the top and then subtract your expenses. Well, now we can see that, we have an extra $10,000, so you can probably afford a small car or various trips a year, but we should probably make this budget a bit bigger to really get into the nitty-gritty stuff. So that is a budget. We have the months at the top for the entire year. We have our income spread out during those months and a list of our expenses. and what that leaves us with each month. A more detailed budget lets you see exactly where your money is moving so that you can make those important decisions that require cost data. But we still need to add a little more to this budget. So we're gonna put in our needs and our wants. So, at the top, the needs are exactly what we need to pay for each month. You need to pay for your rent, your car insurance, your health insurance, and maybe you have some non-negotiables such as your Netflix or Crunchyroll and Spotify. Your wants would be things that you want to do throughout the year, such as, going on vacation, or maybe you want to eat out all the time with Uber Eats, or at least you want to have a budget for that each month. And obviously you have to account for your friends and family's birthdays and maybe even Christmas gifts. And you can see that, now we're sort of starting to fall into the negatives in some of those months, especially during the summer months. But here is what your budget looks like for your year. You can see where your income's coming in and where it's being allocated through each of your expenses and how much that leaves you with each month to kind of allocate to whatever you want to do during those months. But we need to add in our monthly loan payments to see how that really affect our budget. So there we have it. So we have our loan payments. We have to make $45 payments each month. And well, now you can see how that affects your budget. You can really see that the entirety of your income kind of took a hit because of that, but especially during the summer months, you're kind of, in the negative pretty bad. And the point of this budget is so that you can visually see what's happening with your money, and you can say, oh, maybe I don't want to be in the negatives during these summer months. Maybe I want to save a little bit more money for next year. So maybe I can I can lower my budget for Uber Eats during the month of February, and that'll save me an additional $50. Or maybe I don't have to go to Bali in June and I can just go in July, and that'll save me an extra $1,500 so I can, recoup expenses to make sure that I can go comfortably in July. So
Yeah, and the main reason for this tool, since we're not a budgeting program here today, but the main reason it fits in here is because that line item highlighted loan payments is the key to determining what type of loan payment arrangement you may want to make. In your federal loans, you can make changes in your payment plan to all sorts of different programs, many different programs. And so when you get involved in deciding what type of program you want to be in, this budget can help you understand, well, can you pay more? Because you're always allowed to pay more. And if you pay more, it would reduce your principal on your student loan faster. That might be a good thing based on your overall objectives.
thank you, Professor. And yeah, so this is the completed budget. And some important takeaways for the budget is that they're here for your benefit. They're here to improve your life, help you plan for your future expenses, help you make those decisions that you need information on. And another thing about budgets that people usually have some prejudice against, they're not for limiting you. They show you how much you have left after expenses so that you can allocate the rest without necessarily being in the red. So, you can give yourself personally, I wouldn't use $300 on Uber Eats in a month, but I can give myself that $300 budget to make sure that I don't go over it. And it gives me the freedom of being able to use that amount of money, and I know I'll be safe at the end of the month because I budgeted for it, and I wasn't in the negatives at the end of the month. So it's just something to think about. Budgets are your friend, they're a tool, they're not your enemy. And with that, thank you for your time for the presentation, and I'm going to hand you off to Professor Handwerker.
Okay, thank you very much. I'll share my screen in a second. Thank you for Danny, and particularly for that picture of me almost 20 years ago.
You look the same, Professor. You
Oh,
look just as young.
you know how to get your bread buttered. Okay, very good. All right, now we're going to move into a little bit more detail with the loans themselves and how we stand here. Again, this is November 15th, if I recall correctly, and we are going to talk about student loan tips. And I think we got the right audience for the topics that I'm going to talk about. Let's go through and see what we got. If you're holding student loans today, you've got two objectives to be concerned about, basically. One is to make sure you apply for that student loan forgiveness program. It's the one-time Biden loan program for forgiveness. Again, as of November 11th, I think it was, they stopped taking applications. Presumably, as they get further through the legal quagmire, and if it looks like it's going to open up again, they will probably open those forgiveness applications. They only take about 3 minutes to fill out. And then in order to get your loan forgiveness, as we'll see later, you have to have a income verification page you go to just to verify that you're fitting within the income limits that allow you to get the forgiveness. So theirs takes 3 minutes. Okay. The second thing to be concerned about is prepare for January 1, 2023. That's when repayment starts after March 2020, when repayments were not required. We're talking about federal loans now, obviously. In March 2020, when COVID became the monster that it became, all payments were suspended, and they've been suspended. And several times the suspension period has been extended. The final extension period was to begin January 1, 2023. Now, I'm not a prophet, I can tell you that, but I can also tell you, in preparation for today's webinar, I was thinking to myself, with all this legal stuff going on with the forgiveness, I bet that the government, the administration is going to say, okay, we're going to extend the repayment restart again. And although it's not official, in today's news, the Biden administration, a spokesperson, came out and said they are thinking of not restarting January 1, 2023. If you have certain federal loans, this is fantastic for. In fact, all federal loans, it's a really good idea not to be making any payments when you are on this deferment based on the government's giving it away. All right. For private loan borrowers, there's not much you can do because there's no forgiveness. And so it's going to be all about the interest rates. You want to try to get the lowest interest rate possible if you're in the private loan. If you have a variable rate private loan, that means the rates can go up or down based on the current market rates, which are tied to inflation. Then you have a ticking time bomb, because as we all pretty much know today, inflation has been kicking in rather rapidly. So if you have a variable rate, you need to think about when to lock in, if you can lock into a fixed rate, and you will do that by seeking to try to refinance your private loan. That's an art, it's not a science, because the rates go up, rates go down, and I can't predict what they're going to do tomorrow or the next day. But if you have a variable rate and inflation doesn't seem to be going away too soon, if that's the case, you want to do something like that. All right, let's talk about what you should do before the restart in the event, particularly in the event that the restart gets delayed another time. So if you have a federal loan and you're in the deferment mode where you're not paying, what should you do? Well, first of all, you should probably get refunds on the payments you made during the zero interest period time and the payment freeze. You should get those. Just call your service loan provider and see what payments you may have made that you didn't have to make, get them back. And we'll go through why. Certainly, even if the payment period gets extended, if the restart gets extended, hold off making extra payments. There's this deferment, this freeze has had zero interest. So why pay to pay off a balance that's not accruing any interest? Doesn't seem to be any reason for that, in my opinion. What you would want to do is try to make some money while you're waiting to begin paying back your loan. So to the extent that you have extra funds, don't give it as a free loan to the government or the loan program. Put it into a high yield savings account if you can. Getting ready before 2023, of course, is if you do have to start paying January 1, if it gets deferred and pushed back again, you'll just plan for when the new start date would come. And you would get questions answered ahead of time from your loan service provider, find out where your status of loan is. Know what repayment plan you're in or scheduled to be in, so that when the repayment starts, you can, if you need to adjust your repayment plan, you know what you have, and you can know how to fix it or to begin some other option, which there are many. The CARES Act, by the way, did the following, which is good news if you are in a income-driven repayment plan, where you have a certain number of months before your loan is actually forgiven. And so the first question that they answered was, if you're in an income-driven repayment plan, will the suspended payments count towards the time period before you get forgiveness on that loan? And the answer is yes, which is fantastic. And if you're in the public service loan program, which we'll talk about some details of that, you have a direct loan. Again, the time period of the freeze counts towards the period of time before that's eligible to be given forgiveness. This is generally a 120-month period. So if you're working in the qualified public service loan employer, and there are many, if you're working that way for 120 months, if you make payments during the 120 months, at the end of that 10-year period, your loan is forgiven. Now we know that the freeze counts towards that, even though no payments were made. And the same thing counts for the IDR forgiveness program. So that's a 20-year or 25-year program, depending on which one you're in. But it's still pretty good to know that this almost 2-year period, 2 years, 1, 2, 3, yeah, almost 3-year period is qualifying for the length of time you need to get full forgiveness. Now, the reason I'm going to suggest checking with your loan servicer is because maybe a glitch has happened. They are not perfect. So you want to be finding out where you stand with your balance due, what program you're in, what have they done on your information, because you can take steps now in order to make sure that in your record, everything is good. You can get an updated count on where you are towards forgiveness, see what loans you have. Here's a website, you can take a screenshot of that, where it has the application for forgiveness in case if you haven't made it yet, and it opens up again. All right, so what you really want to do is find out where you were as of March 2020 with your loan service provider, what's happened in between. Keep a timeline of all eligible payments that you've made towards either of these loans, either the PSFL or the IDR loans. Make sure you have a good record of that so that it's not lost. And again, ask for a refund on any prior payments made during the freeze. And if you're in a PSFL or you're not sure, there's a help tool where you can find out if you're qualifying for that or how to qualify. Getting into it at any particular time can help. There's the website for that. All right, so in this particular time, assuming that the restart doesn't happen right away, don't try borrowing new loans at this time. Only eligible for forgiveness are the loans before July 1. So there's no reason to go out and borrow for no good reason, so to speak, unless you need to pay tuition. That would be the only reason. And you can't be thinking that, oh, I'll just borrow and it'll get forgiven. New loans aren't going to count for that. In the forgiveness program, we'll be doing it, we do it here and we'll do it later as well, but the forgiveness program is basically a $10,000 forgiveness for federal loans, but there's an additional kick up if you have a Pell Grant. Now you may say, well, I don't know if I had a Pell Grant. So you check with your loan service provider to find out, and here's how where you would go for that. That way you can find out what kinds of federal loans you have to see whether you're eligible for either the 10,000 or the extra 10,000 for a total of 20. And of course, all this is said, by the way, before I go further, all this is said on the theory that the legal quagmire gets solved and the forgiveness program is back on the table. It's possible, unfortunately, it's possible that it will get tabled and we won't have any forgiveness. Back to student loans who are private student loans, convert the debt into federal loans, which are right now the better place to be. And it's been that way for a number of years. There's not much you're going to be able to do to accomplish that. Not too many avenues for that. If you have loans dating back to 2010, there may be an option for that, but most likely not. So when I say how to convert private student loans into a federal student loan, it's pretty much forget it. There's no easy way to do that. just for if you're going to still be borrowing, keep this in mind. They're the better place to be. So if you're in school, you have a couple of options. If you have a private loan, you have a couple of options to think about. Pay down those private loans. Take out more federal loans if you need to borrow. And instead of using that for tuition, if you don't, take out as much as you can over and above tuition and pay down your private loan. This is a good opportunity to do that, particularly if the freeze gets extended. For graduate students, you have a much higher federal borrowing limit. So go ahead, if you have a private loan, borrow, pay off the private loan. You'll be better off holding more federal loans. If you're already in repayment, you can do a similar strategy. You can apply to your loan service provider to figure out how you can lower your monthly federal payments on the federal loans. There may be options to do that. And then with the extra money to pay down on the private loans that you have. So you could sign up for this income-driven repayment federal loans or several of the types that they have like that. And if you're not sure what you should do and what your payments would be, there's a loan simulator that helps you do this. I'm going to show you the website for that in a second. So you want to use that in addition to asking your loan service provider questions. And this will also help you to determine whether you need to, whether it should be that you consolidate if you have more than one student loan out there, more than one different type of federal loan, whether you should be consolidating that into one, which might make it easier just to visualize it and handle it. By doing so, you can take different federal loans. Consolidation allows you to take different federal loans and put them together as one. The interest rate doesn't change. It becomes a blended interest rate for the consolidated loan. So you're not going to save interest, but what will happen is you get to do a couple things. One, you get to maybe change your loan service provider if you want when you consolidate it. So that's one possible advantage. Two, it makes it easier to handle because you only have one loan to worry about. And when it's consolidated, it also makes it easier for you to change payment plans because you can change the payment plan with a consolidated loan into what's works better for you. So I'll just put payment plan. So consolidation is probably not, here's the loan simulator website. And while you're taking the screenshot of that or writing it down, I'll just mention that the consolidation program, you probably can't go wrong consolidating. So I think it's like, it's not quite a sure thing all the time. There's never an always, it's a good idea that, but in this case with the consolidation under today's environment, it's probably not going to hurt you. In 99% of the cases, I would say. Refinancing the private loans into better terms. If you can't pay down based on the theory that we just came up with, refinancing into more manageable terms is fine, but refinancing federal loans to private loan is a mistake. So don't rush to pay off your federal loans by getting a private loan. That's not a good idea at all. So again, current students should max out on their borrowing, use it to pay down private loans. If you do have those, and if you want to know how the forgiveness is going to apply, well, this slide says we basically 2 days ago and even today more so, we just don't know. All right, service transfers. I just want to throw out a few pointers here. We got some more meat and potatoes coming up, but just a couple things as words of advice. Watch your service transfer, your loan service. Watch for loan service provider transfers. That's what this is about. Watch when they happen to make sure that your records are kept up to date in the right fashion with the new service provider. Mistakes happen. Also, watch out for scams of people who say that they'll consolidate for you or they know how to get you a better payment plan. Just watch out. Do it. It's all easy to do on your own with your loan service provider and with the tools that they have on the website. You can do it yourself. Back up your records, however, in case if they already haven't made a loan service provider change or transfer, just keep your records backed up. Update your contact information with the loan service provider, whoever they are. This is an important one, so I'll put a couple exclamation marks because they don't care if you update your contact information. They don't care if they send you an email and you don't respond. They don't care if they call you and you don't answer. They will just do whatever the dates say they have to do. If there's a penalty or any kind of change that they have to make, with your approval or non-approval, and they don't get a hold of you, they will just go ahead and do it. They don't go out of their way to try to find you. So make sure they know how to get a hold of you. They don't cut you any slack. That's the exclamation mark right there. All right. Even though we're getting close to the restart date, if it gets extended, don't make any payments until you're required to. Build up an emergency fund, pay off those private loans, and at the end of the interest-free zone, whenever that happens, make one large payment, whatever you've built up, either against private or federal loans. Just save it up. Don't make the payments now. It's zero interest. Make it when it counts, when interest starts to toll again. Earn interest on it if you can. Don't spend it. Okay, you heard that. Don't spend it. All right. Okay. The reason federal loans are great, and the reason why not to rush to pay them off, is for many reasons, but here's a big one. If you lose your job, get sick, or pay substantial medical bills, you'll be glad you kept the money, like during this period of time. So that's why you shouldn't rush to pay off federal loans. Even though there's interest accruing, there's a chance, if you're on a income based plan, let's say you're on an IBR, one of the types of where you pay only based on your income. So if you're not making income, you're not going to make any payments. And what's good about that is that there's that clock with many of those loans, with many of these federal loans, where at the certain end of a certain period of time, they do forgive whatever's left. So this is like a great insurance policy to have, almost like a disability policy, that you'll be glad you have if you have federal loans and you keep the money rather than rushing to pay it off. Rush to pay off the private loans, yes, because they don't go away and the interest accrues. All right, that's just good advice. Make sure you keep in touch with the service provider with questions. All right, refinance private students loans we talked about. Now is not the time to refinance federal loans. There's no reason to. It's almost never a good idea to get out of a federal loan. And the interesting thing about the refinance of a private loan is that although interest rates have been going up with inflation, the market's a little bit different for the private loans. So don't think, oh, I'm not going to bother refinancing now. They haven't jumped up like mortgages. It's a competitive market in the student private loan market. So the banks have been leery to raise interest rates too much. And if you shop around, you can maybe find a good deal if you need to refinance the private loan. One good thing that the inflation is teaching us is that it's always a good idea to borrow at maybe slightly higher rates, but over a longer period of time. And Danny was alluding to this earlier, and that is that if you lower your monthly payments, lower those monthly payments to where they're affordable, but even maybe too affordable, and you got money left over, you can always pay more. You can always pay more, and that reduces the amount of interest you'll pay over time, if you can. So I'll say if. On private loans, you can always pay more. But by having the lower monthly payment, God forbid something happens, you get furloughed, you're on a whatever, you don't have the income, you'll be glad you have the lower monthly payment. So don't go rushing to try to pay those off. All right, this is back to the forgiveness. We went through this. It's the 10,000 automatically, or if it goes into effect, the extra 10,000 for Pell Grants. Let's go forward. How do you know if you qualify? Well, it's going to be based on income, your income, unless it's a Parents Plus program, then it'll be based on the parents. You're going to have to certify that you meet the income requirement. We spoke about this, but here's the details. You're going to do that under penalty of perjury. No one's going to be checking on you directly. You're going to self-certify. And this leads to what could be interesting to watch in the news. Could be some frauds that happen where people lie about their income in order to get the forgiveness. That's to be expected. We think back to the payroll protection program where there were lots of frauds at a rate of 10 to 15%. That was money given to businesses during COVID. Here, there may be some differences where the fraud rate is not as high, maybe a lot lower. And that's because the Biden administration said that if there's this forgiveness, what they're going to do is they are going to check for the self-certification of income. They're going to check about 1 and 5 million borrowers are going to check. If they find enough evidence of abuse, then they're going to start checking more people. So I don't think fraud is in the picture here. Parents Plus programs eligible for forgiveness? Yes, they are. Are current students able to apply for forgiveness? Yes, they are. Once it reopens, if it does, if you're a current student, you can still get that. Student loan refunds do not get taxed at the federal level. So this is the IRS. They are not going to tax that. It's under statute. All loan refunds, all loan forgiveness programs until 2026 are tax-free up to 2026. However, also the PSLF is not taxed at the federal level either. So if you're in that program and you're going to have forgiveness under that program, don't worry about income tax at federal, but states are a different story. Many states do follow the government, so there's not too many states that you have to worry about. And fortunately, Maryland's not one of the ones you have to worry about. Some states are going to tax even the one-time forgiveness program. And here's a list of the states that right now would tax. As you can see, Maryland's not there, DC is not there, Virginia's not there. So good news for our area. And right now, these three states have on the books bills that they are going to consider to not tax the forgiveness as well. And if they do, then the rest of them may fall into place. What about payments made for others by others? In other words, suppose you get help from a family member to help pay off your private loan or even the federal loan. What happens then? It's like getting forgiveness on the loan. Well, does that get taxed? And the good news is that that doesn't get taxed. What we're really talking about is a gift. So there, it's going to be on this slide. It's a gift. It's a gift from the family member, and you don't have to worry about paying tax on the gift. There is no gift tax to the recipient. Recipients do not have a gift tax. The giftor might have a gift tax, but that's not your particular problem. And there's lots of ways to avoid the gift tax, even for the giftors. All right, we talked about consolidation. Let's a few more things about it. When you consolidate, what you're doing is you're getting rid of all the old federal loans into one new loan, generally one new loan. It could be more than one new loan if you have subsidized federal loans and unsubsidized federal loans. You could wind up with two consolidations, but that's okay. So you're just paying off the old in favor of a new consolidated loan. And that's what you get, a brand new consolidated loan. And if you're seeking student loan forgiveness, being smart about consolidation is critical because you could get into a program where the forgiveness happens early. We're not talking about President Biden's forgiveness. We're talking about regular forgiveness programs. You might be able to do what we call smart consolidation, and that is move into a program where instead of 25 years, maybe it's 20 years, you pay for 20 years based on your income, and then the balance is forgiven. That's the kind of planning you want to do with consolidation, is to think about what's the best place for you to be. This is just in case somebody's is older like me in the audience. These ended in 2011, just to give you an idea that we're not going to get into too much detail, but they're not eligible for student loan forgiveness. So we don't need to go much further into that. They can go into a consolidation loan, but that's about it. Okay, so let's move forward. So put another way, consolidation is a vehicle to turn some federal loans that are not eligible for PSLF into an eligible loan. That's not the case for most, but you never know. So the best way to do it is to plan with your loan service provider to see what consolidation can do for you. Again, it's rare that it will hurt you. Rare that it would hurt you. In most cases, it won't hurt. It also reduces the number of companies you might have to deal with if you have already more than one federal loan out there. Could streamline your monthly payments. All good stuff. Almost all good stuff can happen. All right, bad consolidation is, well, there used to be one. There's not too many that you can do bad today, because in the past, what would happen is if you did a consolidation, it would restart the forgiveness clock. So if you had a 20-year clock on and you were in the year 15 and you consolidated, you lost that. That doesn't happen anymore. So there's almost no bad consolidations. That's why I say it can't hurt. Parent plus loans may be a dangerous place to consolidate with direct loans. So, but it all depends on what you're asking for and what kind of loan types and loan balances you're looking for. So you got to do the homework on that. No easy answer, unfortunately. But do the homework. Again, consolidation is probably a good thing to start thinking about. There are tons of different federal loans out there. That's why you got to work today with your loan service provider to find out what's the right payment plan for you. Okay, lots of different rules. Double checking, make sure you do it right. Now, some words of advice from experience. You're going to talk to the student loan service provider, as we've talked about, as we mentioned, but fact check everything they tell you. These are huge businesses, and they've been known to make mistakes. They are just basically huge call centers. And as you know, sometimes they're trained well, sometimes they're not. This is what I've been doing all my life when it comes to certain types of tax research. And that's to do the following: call up. It doesn't seem like the person knows what they're talking about. Hang up politely, call back. Hope you get someone better the next time. And sometimes you got to keep doing it till you get someone who really seems like they know what they're talking about. Make sure you have an email chain to prove what you were told. That may come in handy someday. How do I consolidate? It's not too hard to do. Department of Education does it all for you. You do an application, takes about 30 minutes. The process might take 3 months, but there's no fee, so you shouldn't be falling for scams that'll say, I'll help you consolidate it. You don't need that. This is from the Department of Education. This is their warning. You do not need to pay a fee for that. You may be contacted to do it. Don't rush to that judgment. It's very easy to do on your own, as they say here, and it's very true. I've had students who graduated and have verified that for me. Okay. Consider the repayment options. We've talked about that. Now the rate won't change again with consolidation. It'll be a blended rate. You may get 2 loans instead of 1, which we mentioned. And I think we're getting close to the end of this. Yeah, this is the good part of the consolidation, is you can choose a new loan service provider if you want to. Very little impact to the credit score, so don't worry about that. Money saved over the long run of getting a better payment plan will be the big factor, and maybe larger forgiveness at the end of that federal loan. Okay. All right. I think that's hold off. You're about to buy a house because you want to work with your potential mortgager. Consolidation. That's actual consolidation can take months. Okay. All right. Let's see what we got here. We can take time for some questions, or I can move forward in a space of 5 minutes with a couple other ideas. Any questions?
All
Okay, I
right,
don't hear any
This
questions.
is all good stuff, Sam. Thank you so much.
Okay, you want me to go a little bit further up to the 4 o'clock range?
Yes, please. That'd be great.
Okay, let's see how much we can put in of some of this other information. Why do we have a crisis? Well, these numbers sort of say why we have a loan crisis for tuition. Look what the changes has been over the years in minimum wage and rent, but compare that to the public college tuition increase. And I shouldn't have shown this slide since I'm on the faculty here. Too late. Okay.
Professor,
all right. Also, yes.
Somebody asked a question in chat.
Okay, yes, go ahead. Let me see.
They said, can you and your spouse combine / consolidate loans?
No, there's no joint option there. It's each person's on their own. Sorry about that. Yeah, and I don't know if that's a good idea anyway, because like all good partnerships, some of them don't last. We hope for the best. All right, the working hours necessary to pay tuition have gone up. Rent prices have hurt. This is all what's lead to the crisis we're at now. Minimum wage doesn't help. Federal loans are much safer. They're the better way to go today, and that will be that way for a while. Let's see if let me get to some meat and potatoes here. Okay, Parent Plus. With the Parent Plus, if you're an undergraduate, that's something to consider, because the parent borrows the loan if you can't, and they'll chase after the parent. That might be fun to watch. Interest rate is 5.3. There's a origination charge of 4%. Just want to see if there's anything else on this slide deck for graduate students, which I think we have more of here. Here, this is the program you're probably already in. If you're with the federal, the Graduate Plus student loan option It's a great program. You can borrow a lot of money, which can help pay off any private loans you have, and those private loans don't have to be for college. They could be for other reasons, like a car loan might be a good idea to pay off. I would encourage that, to borrow as much from your federal loan as possible. It's if you have money that you owe people money, it's a good way to consolidate your debt in a total package. All right, borrowing money when student loans are not an option. If you're turned down for federal student loans, that's a flag. You ought to find out why you're being turned down, because you might find out something about your credit or your particular area of career. All right, here we go to cancellation, public student. All right, so in case you didn't know too much about the PSLF program, that's what I want to get to here. It's just a basic rundown of what's eligible. The loans have to be certain types of federal loans, that you have to make timely payments, which that's why the freeze was so important, because all those non-payment months count towards the clock of making the payments, and you must be working for an eligible public service employer. So let's take a look at the eligible payment plan. It has to be some kind of income driven repayment plan, which is probably good to have. It's a good program to be on. Eligible service employers, where do you know if you are working for them? Check employer eligibility. It's easy to check. Let me give you the site. This is what it is. You just do a search for the Public Service Loan Forgiveness Employment Certification. And you should, if you are working for the right type of employer, you should be following one of these every year, just to make sure you're staying qualified and you're not lost in the system, so that after 120 payments, meaning 10 years, 120 months of being on the program, your loan will be forgiven, whatever's left over. So that's words of advice. Check to see if and it's also good to take a look at who qualifies in case you're thinking of job change. Income-driven student loans, I, again, highly encourage them. What they do is they forgive after 20 to 25 years when they're income driven. So I really highly encourage getting into that. And just as a quick rundown, we'll do this like a movie. Forgiven debt, by the way, outside of the forgiveness program that President Biden has proposed, the forgiven debt for these other programs is usually going to be taxable income, except only after 2026, or I should say after 2025. So after 2025, keep in mind that you might be on a program that won't have forgiveness until 2030 or 2035. That might be taxable under the law that exists then. All right, here's an example of the many different types of plans out there. That's why I'm not going through the details. You got to look at the fine print on each one of those. But look how some of them go 20 years, 25 years. And that's a real nice thing if you're doing an income-driven plan. You might wind up paying it off. That means your income went up, but that's okay. And just real fast, Debbie, real fast. I know I'll go over time, maybe by a minute. And there are certain programs out there. If you haven't already been aware of it, let me just tell you what some of them are. There's employer assistance programs. Check with your employer. They may be helping you out with college tuition loans because they're interested in getting you debt-free. You do have to pay tax on that benefit. That's okay, because it's still a plus to you. There's borrower defense against repayment if you were led astray by a private college. A private school led you astray to think that you're going to make a lot of money, that your career is going to be really golden. You may have an ability to get out of that loan, but check with a lawyer on that, or get back to me on that one. There's teacher loan forgiveness programs. Look how many there are. I don't think I have all of them. Here's one. Here's another one. The Perkins loan for teachers. It's teacher loan for state-based programs. And there's even one for lawyers. How do you like that? So if you're thinking of going to law school, not a bad idea. It targets if you work in the public interest, so you'd be like a public defender, and that's when it would apply. There's a couple other programs law school repayment assistance has. The military, most people are aware of that, but just so you know, there's forgiveness and nurses. Look at that, nurses too. Student loan and bankruptcy. Okay, let's say things really get bad. What happens then? Not going to be too good. Bankruptcy generally doesn't dismiss student loans. So don't think of bankruptcy as a way of reducing your student loan debt. It doesn't happen too often. If you die, God forbid, or you become disabled, then your student loan will probably get discharged, or at least go into a deferment for everything, for forgiveness. When forgiveness options fail, what do? Seek help, because that's as much time as we have. So that's a good one to end on, because I don't know how to answer that question. You'd have to seek help. Okay, I will. There we go.
Question, Sam.
Sure.
Are there folks who specialize in helping folks kind of navigate this whole process of taking out loans, consolidating loans, etc.? I mean, can we replicate you and have them all over the country to help folks, or how does that work?
It's a very good question, and why it's a good question is I was telling Danny before we got on here today. I was explaining to him that last year we did this. Things were pretty easy. It was a pretty simple playing field. It's increased dramatically in terms of just steps that you can take and the options and the choices. So yes, there is an industry of consultants out there. Just be very careful, shop carefully, maybe check with some friends, because there are scam artists every day. But yes, there are people out there, and I can recommend some people, not here publicly, but I can certainly recommend offline.
Okay. That's good. Thank you. Does anybody else have a question for Danny or for Professor Hanwerger? Right. Well, hearing nothing, what can I say? Thank you. Thank you, Sam, and thank you, Danny. That was so comprehensive. I have so many takeaways with me, but I will leave knowing that federal loans are really the way to go. So
Yeah. It's if you can't get a federal loan, that's a different story. But yeah, that's the place to be.
right.
Wish
Well-
everybody luck with all this. Maybe what Terrafin will do is send you like updates on the Biden loan forgiveness program that you can post to your contingents.
That would be great. We could put that in our newsletter.
Yeah, and Kat, I agree with what you just put in the chat, 100%. Yeah.
Yeah. Do you have any concept of when that would happen? Early next year, next spring, next summer?
So there's right now they're probably going to have to go to an appeals process. Those usually don't take too long,
Right.
but it's probably not happening before the end of this year. And if it goes to the Supreme Court, that means it's not going to happen until
Right.
mid-summer of 2023 at the earliest.
Got it.
And quite frankly, that's exactly what the prosecutors of this, the plaintiffs, I should say, of this case are hoping to do. They're hoping to get a couple rulings in some different circuits that are conflicting, so they can take it to the Supreme Court.
Right. All right. Time will tell.
Okay.
And yes, fingers crossed. All
Thank
right.
you.
Thank you again for sharing all this. Oh, Sarah, do you have a question? No.
She just wanted to make sure that I knew that she's a nurse and
Yeah.
she's in that program, so she can get.
I was
really
just
great
getting on to say thank you and to show my face. So thank you.
Aw, thank you, Sarah. Nice to see you.
Good
All
luck.
right. Well, time to wrap it up. We are going to share all of this information with everyone who registered. So remember to complete the survey. And if you want a reminder about upcoming workshops and our services, we have a terrific newsletter that we send out once a week. We'd love to include you in on that. So go to our website. You'll be able to sign up for that. And with that, have a good week, everyone. This is our last workshop of the semester, but we will be back at the end of January with 10 more workshops in the spring. So thanks, everyone. Take care.
Thank you, Debbie. Take care of yourself.
Thank you. Have
Bye-bye.
a good evening.
Thanks, Danny.
Thank you.